You're going to want to buy every share you can this week because these top 5 stocks have massive potential in December. What if you could go back 3 years to the end of 2022 and buy Nvidia for $14 before it ran up 1,200% to over $200? Or what if you could go back 3 years to the end of 2022 and buy Palantir for $9 before it ran up to over 2,000% to $200? Well, you have the potential to do just that in a different sector that is just now starting to rally. And today, I'm going to give you the top 5 stocks that you're going to want to buy heavy in December. Now, for those of you who are new to this channel, my name is Stock Curry. I'm a former Merrill Lynch and Morgan Stanley investment banker, and I have over 25 years of trading experience. Tech stocks just had their first red month since April, with AI stocks getting hit especially hard during the first 3 weeks of November. But the sell-off in November appears to be technical rather than fundamental. Nvidia reported better than expected revenue, better than expected earnings, and better than expected forecast. Yet, the stock was still down over 12% last month. And since earnings are better than ever, yet the stock is still going down, that indicates that the sell-off is technical rather than fundamental. Stocks don't go up in a straight line. They have pullbacks. This is just the normal cycle of how stocks trade. And when stocks go up too fast, like AI stocks have, they tend to pull back before they continue higher. And November's pullback has led some people to get worried that the AI bubble is starting to burst. But I personally think it's too early. I think we are going to hit new all-time highs in the stock market in December. You might think Nvidia is overvalued, but as the dot-com bubble taught us, stocks can go much higher than bears could ever imagine. And that's why it's prudent to remain bullish right now, because we're likely to see stocks rise much higher before they top out. And Nvidia said on their earnings call that they're not seeing any signs of an AI bubble right now. In fact, they're seeing demand for AI increasing. So it makes sense to continue to buy AI tech stocks right now because many of them will probably rebound and will probably hit new all-time highs in December. That said, it's important to remain prudent because stocks won't maintain PE ratios of 400 forever. Just take a look at Palantir, which fell 17% in November. When stocks reach PE ratios of 400, you know we're in a bubble, and eventually that bubble will burst. But when the bubble bursts is anybody's guess. Nobody knows how high the AI bubble is going to go before it bursts. We could see stocks double or triple from here. But what we do know is that eventually the AI bubble is going to burst. And it's possible it could even burst next year. So rather than continuing to buy AI stocks that are at very high valuations, money is starting to move into a new sector. And we're seeing some stocks in these sectors rise massively over the past few weeks, with stocks like Abercrombie & Fitch up over 40% last week alone. And you need to remember that retail is just along for the ride. So follow the money. If large institutions are starting to pull money out of AA stocks and putting them into other stocks in a different sector, the best move is to follow them. After all, we want to buy stocks that are going up. We don't want to try to catch a falling knife. You want to buy stocks that are rallying just like the stocks in this sector are. So I'm going to give you 5 stocks that are just now starting to rally that you're going to want to buy heavy in December. During a recent press conference, Jerome Powell said that while the massive investment in AI data centers is clearly one of the biggest sources of growth in the economy, consumer spending is actually playing a substantially bigger role in that growth. You already know the way to make money in the stock market is to buy low and sell high. And that is why investors are starting to sell their AI stocks at high prices, and they're starting to buy consumer goods stocks at low prices. Consumer retail stocks from multiple big box stores are starting to rally to new all-time highs, while tech stocks start to suffer. When the dot-com bubble did eventually burst, we saw certain sectors of the economy, stocks that had been beat down and undervalued for years, outperform tech stocks by a large margin. When tech stocks fell by 80% or more during the dot-com bubble crash, some sectors actually rose. And those sectors were specifically consumer goods. And that's what we're starting to see once again. After all, I'm sure you wish you had bought heavy at the end of 2022 when stock prices were beat down. If you had, you could have made profits of more than 1,000% on certain stocks over the past 3 years. And you have the potential to do that once again with a new sector of stocks that is just now starting to rally. Stock number 5 on my list of the top 5 stocks to buy for December is ticker WMT, which is Walmart. Now, Walmart has been a powerhouse for years. Over the past few months, it has been trading fairly flat, but now it's starting to break out and rally. And you have the opportunity to get in at the beginning of the rally here. Box stores like Walmart that have long catered towards middle class and lower income consumers appear to be seeing an uptick in business. Walmart reported adjusted earnings of 62 cents a share in Q3, above Wall Street's expectations of 60 cents. Its revenue rose 6% to $179.5 billion, beating analyst projections of $177.6 billion, and its stock is up 18% for the year. What's interesting is that 9% of that 18% occurred just in November alone. So you can really see how after months of pretty much trading flat, Walmart is really starting to rally. Stock number 4 on this list is TJX, which is TJ Maxx and Marshalls. And just like Walmart, TJX has been rising steadily for the past few years. Also like Walmart, TJX has been trading flat for the past few months and is just now starting to break higher. TJX Companies, which owns retailers like TJ Maxx and Marshalls, said during the company's Q3 earnings call that while the company targets consumers across a broad range of ages and incomes, it was the lower income demographic that was driving the sales growth in the majority of our geographies. TJX Companies reported a 5% increase in sales for the quarter, and its stock is up 26% for the year. And if you want to find stocks like these before they start to run up, join me and over 7,000 others in the Stock Dads Discord. We have over 30 full-time multimillionaire traders posting their trade alerts in real time. You can copy their trades if you want to and learn how they make money. And you could potentially even see profits like this in your portfolio too. By the way, all of those trades I just showed you were placed on Friday. We are making money in the Stock Dads Discord every single day. And over 7,000 people just like you are copying our trades, and many are making money with us. And if you're new to trading stocks and options and aren't really sure where to start, Amar is starting a new $1,000 to $10,000 challenge. He already grew the account from $1,000 to $10,000 a few months ago, and now he's starting a new $1,000 challenge so that people just like you could join in and potentially see 1,000% profit in your portfolio over the next few months. Best of all, when you sign up right now, you'll get the Black Friday sale and save 45% off your membership for life. To get the 45% discount, just enter coupon code BF at checkout. Just use the first link in the description below or go to weprofit.io/discord and enter coupon code BF at checkout to get trade alerts from over 30 full-time professional multimillionaire traders and save 45% off your membership forever. These are the lowest prices you will ever get for the Stock Dads Discord. This offer ends December 7th, so don't miss out. The next stock on my list of the 5 best stocks to buy in December is URBN, Urban Outfitter. It's not quite as consistent as the prior two, but it has started to rally over the past week. The only thing I would watch out for on this one is this big gap that was formed on Wednesday. We'll probably see the gap filled before it continues higher, so I might wait until the stock pulls back to around $68 before buying in. But once it does, there's a good chance the stock will rise above $80 per share and possibly much higher. Urban Outfitters just reported earnings, which is what caused the big gap up. For the quarter ended October 2025, Urban Outfitters, ticker URBN, reported revenue of $1.53 billion, up 12.3% from the same period last year. Earnings per share came in at $1.28 compared to $1.10 in the year-ago quarter. And the reported revenue compares to estimates of $1.49, representing a surprise beat of 2.43%. The company also delivered an earnings per share surprise of 7.56%, with the consensus estimate being $1.19. And stock number 2 on my list is ticker GAP, which is Gap. Now, this stock is much riskier than the others. As you can see on this monthly chart, it is very volatile. What I'm looking for here is a breakout above $32. That would be the highest price on Gap since the dot-com bubble 25 years ago. And with the rally that started after earnings were reported a few weeks ago, I do think GAP is primed and ready to finally reach the highest price it's seen in 25 years. This is a stock that is long overdue for a rally. GAP is the highest risk of all of the stocks I have talked about today, but it also has the highest profit potential. And the final stock on my list is ANF, Abercrombie Fitch. And don't let the fact that ANF rallied 40% after earnings scare you off. It is not too late to get in. Just look at the weekly charts. ANF is still nowhere even close to the $200 per share it was trading at last year. And with a PE ratio below 10 still, this stock remains extremely undervalued. I would not be surprised to see ANF rise to over $300 per share if this rally that started last week continues. And those are the top 5 stocks that you're going to want to look into buying heavy in December of 2025. Of course, profits are never guaranteed, but I would much rather buy an undervalued stock that is just now starting to rally than buy a stock that is already up over 2,000%. After all, the best way to make money in the stock market is to get in early before these stocks go on a major rally, and this is your chance.